Mike, I'm getting ready to pay off my mortgage with a lump sum. What's the process? What questions do I ask the mortgage company? Do I file the final payoff paper with the county? Thanks.
Yep, Mary, that is a good question. So what I would do is make sure you contact your mortgage company and actually get a payoff, because what the balance you see online or on your statement is not going to be the actual payoff amount, because there's usually that principal balance there plus some interest building up. So make sure you get a formal payoff statement from them so you know the exact amount that you need to send them to pay it off on a particular day. And then you're going to want to get what's called a satisfaction of mortgage. So they're going to send you something that basically is proof that you have paid it off in full. So then just make sure that you have them send that out to you as well. That's usually mailed out. After that payment is made, you'll probably get that 2 to 4 weeks probably after you make that final payment on it. So those are the two things. Get a formal payoff statement so you know the amount to send them, and then keep your eye open for that satisfaction of mortgage that'll come out, and you'll be good to go.
That's a great question, Mary. One thing that many of our clients are doing when they're in your situation where they're about ready to pay the mortgage off or the mortgage is paid off is they'll get a hold of Mike Overson and they'll set up a home equity line of credit so that they have access to the equity if they need it. They're not necessarily going to use it or draw on it, but they have it there. And if you own your home free and clear, it's a great way to just position yourself. So if you need cash, that you have it available and it's ready to go.
Yep. It's one of my tips that I give to everyone that I work with who's nearing retirement, because when you get a home equity line of credit, you have to qualify, right? Mm-hmm. So you have to be able to show that you can make the payments if you draw from it. So let's qualify for that home line of credit. Let's open it up while you're still working, while you have the income to qualify. Once you go into retirement, if you need money, you can just grab it. You don't have to requalify at that point. So I just recommend open up the biggest line of credit you can against your house before you go into retirement, so you have access to that money. You only pay in what you use. So if you never use it, you don't pay any interest on it. It's just great. It's a great way to go.
Yeah, it's a great way to go.